Hi there, and welcome to Finance Focus with Andrew. Of course, a platform where we engage in conversation that endeavor to enhance our financial literacy. We engage in conversation that make and understand more about money, may it be from savings, may it be from the perspective of investing, especially on the passive sources of investment. So that is the much that we get to dwell with in this particular channel. So welcome aboard to this live session. And the purpose of this live session, it's basically trying to understand the CMA report for the corrective investment schemes for Q2 2025. So Q2 is the period ranging between the months of April and June. So basically, it is a 3 months period, that is April, May, and June. And Capital Market Authority, that is the government institution or organization that is in charge of monitoring the corrective investment scheme on how the different fund managers are doing. Is the market growing? Is the market regressing? So we will be able to see that all in a while. So this live is just to analyze the report, to go through the report and get to see the different aspects of the results. It is said that data itself is not important, but it is what we do with that data that makes it important. So if the Capital Market Authority just generates a report and we don't do anything about it, it will not be important. So it is what that we do with the data given by the Capital Market Authority that makes it important. So I welcome everyone aboard to this particular session so that we can get to see how the market is faring. We get to check on your particular fund manager. We see how they are. We see how your fund manager is faring. Then we see also the general trend of the market, how the market fared in Q2 2025. Come aboard and we'll go through the report step by step so that we can get to see whether there are some important decisions that we might have to make from the Capital Market Authority's report. Now, to start with, starting with the report, the Capital Market Authority decides to start the report by giving an overview and saying that as at 30th June 2025, there were 55 approved corrective investment schemes composing of 234 funds. Out of these, 40 are currently active. The most popular fund is money market fund, with other fund types including fixed income funds, equity funds, balanced funds, and special funds. Now, we can see that we have around 55 capital market. We have 45 licensed fund managers by the Capital Market Authority. So the fund managers that has been licensed by the Capital Market Authority are 55, but there is a very important point there that out of which 40 are currently active. This means that there are some 15 fund managers that are not active. So it can be so sad for you to think that you are still investing or you are still saving with a fund manager, but they get to happen to be among the 15 fund managers that are not active, because The report from the Capital Market Authority is very clear. We have 55 licensed fund managers, out of which 40 are active. It goes without saying that 15 fund managers are inactive. So the first step is to ensure that you are not investing or you are not doing business with those inactive fund managers. I hope again it is still another common thing there that the money market fund is the most common type of collective investment scheme that is known by a lot of people quite a bit for the past 1 year or 2 years. And anytime we talk about collective investment scheme, money market fund is what that will come to the mind of majority of the people. But it is important to note that we have other types of collective investment schemes. Money market funds is just one type of the fund that is there in the collective investment scheme. We have other types such as the fixed income funds, we have equity funds, we have balanced funds, we have special funds. And as we proceed with the report, we will be able to see uh, the difference between the money market fund and all these other kind of reports, other kind of funds that exist in the. Let's go to the second point that was noted by the Capital Market Authority, and it reads that in the period ending June 30th, 2025, growth reported by existing CIS funds, as well as additional fund managers registered by existing umbrella schemes and commencing in the period between March, that is April, May, and June. The amount of money that Kenyans invested in the corrective, this that made me to get into thinking. Now, I find it that it is very common this corrective investment scheme. You will find majority of the people talking negatively about the money market fund. But why are we having negative reaction about corrective investment schemes, especially money market fund that is the most common in social media? But we experienced a growth of 100 billion in 3 months. So is it people that is it can it be that people are fighting money market funds on social media uh, and then going back and investing in the same funds? Because if we were to go by the emotions that people put in social media about these corrective investment schemes, if we were to carry those emotion and make decisions based on that, I would expect the corrective investment schemes market to regress. I would expect to see that funds are losing investors. Funds regressed by 100 billion in the 3 months. But it's very surprising that in 3 months, the market grew by 100 billion. Now, it means that if you make your decision based on what you hear people say in the social media, you might be wrong. Now, there, who was contemplating about opening a money market fund account, but once they got to the social media, they came against someone talking. They came against someone talking against money market funds, saying the way it is nonsense or whatever they said. And this guy took a step back. But you get to realize that people are pumping more money in the corrective investment scheme. So it is very important to know what you used to base your financial decisions. Is it the emotions that you see people commenting with in the social media, or is it the data that is provided? Someone discouraged you. Know that there are people who did it in quarter 2, and they did not just open account, but pumped in a total of 100 billion. So the total corrective investment schemes grew by 100 billion in quarter 2 2025. And of course, the larger portion of that growth is attributed to the money market funds. That is the most common. We'll see in a bit that more than half of that growth was in money market fund. So as people keep fighting money market fund on the social media, know that majority of people are opening a money market funds account and pumping their emergency funds there and pumping their savings there. Uh, I don't like engaging in the conversation whether a money market fund is an investment or not. Uh, it depends on what you believe in terms of investment. But what I can say is that if you have some savings in your bank account where you earn zero interest and maybe charged a monthly fees, that money would be better in a money market fund rather than that bank account. Remember that your bank account give you zero interest, but your money market fund will give you some interest regardless of how small it is, and you still maintain the same liquidity that you have with the money in your bank account. If you have a money market fund, you know that in some money market fund, you can withdraw your funds instantly just dialing a USSD code star bra 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 hash, and in 1 minute you'll have your money drawn from your money market fund to your M-Pesa. So why would you have some money stashed in a bank account that is giving you zero interest, uh, where we have some 55 fund managers where you can put your money in a money market fund and some small interest and still maintain the same liquidity. So get to think of it. So if you don't have a money market fund, whether you believe it is an investment or not, uh, in the year of the road 2025, it sounds unwise to have some money in a bank account that is earning you zero interest. So you can tell me in the chat, do you have a money market fund? And if no, what are the reasons as to why you prefer not having one, and why you prefer not having one, and where do you put your money in an avenue that gives you both some small returns and liquidity at the same time? Maybe there are better options that we can have. So let me know in the chat, and let's engage in the chat. In case you have any question, feel free to drop it in the chat, and we will be able to address it as we move forward. So I expect to see some conversations on the chat. May it be questions, may it be feedback, any type of engagement is welcome. Now, the collective investment schemes field from 2018. So you can see that the growth has been positive since 2018. I don't see an area where we had a regress in terms of the assets under management. And when we talk about assets under management, we are talking about money that Kenyans have invested with the different fund managers. So when you say that there has not been a regress since 2018, it means that people have been taking it positively. They have been pumping money in there since 2018. So the growth in terms of asset under management has been positive 2018. And of course, we are in the era of enlightenment. People are getting to know these things more and more. So I expect the market to continue being very aggressive I expect the growth to be more than we have experienced as assets under management have grown steadily from 56 billion in March 31st, 2018 to 596 as at June 30th, 2025, representing a 953% growth. So in 2018, we only had 56 billion in terms of assets under management by all the fund managers. But by the end of June 2025, the asset under management were 596. That is almost 10 times growth in the 7 years period. And I'm sure much growth has been experienced in the recent years when people are coming to the enlightenment of these things. You see, sometimes back, things about investments, things about the passive income avenues, the money market fund, the special funds, the equity funds, has been like uh, set us scrolling through TikTok, and someone is giving some insights about money market funds. You'll just be scrolling through Facebook. Someone is giving some information about special funds. So back then, such information uh, used to be so used to happen to be like a secret that is held by a group of people. But in this era of social media, if you don't get such kind of information, you only have yourself to blame because the information is available to everyone. The same thing as the information regarding things such as the treasury bonds, the treasury bills, that is basically the government securities. It used to be some kind of information that is reserved to a few people. But over the years, we have seen more people and more people knowing about government securities. We have seen systems being digitized, so you can do your investment as you sit in your house. So if you don't make a move, you only have yourself to blame because we have the information, everything at the comfort of your house. Now, we go to this section that they are calling CIC market share, and definitely market share is to see who is taking a big stock, who is taking a big share of the market. So the statement reads, the total assets under management held by fund managers as of June 30th, 2025 was 586 billion Kenya shillings. Sunram Unit Trust, we have already started some mentioning some specific name of the fund managers, saying that Sunram Unit Trust scheme reported the highest assets under management, that is 113 billion, representing 19.1% market share, closely followed by CIC Unit Trust as at 93.4 billion, representing a 15.7%. Now, why is asset analysis? Now, for me, and I believe this is what it stands for, asset under management is the funds that this particular fund manager has been given to manage by Kenyans. So the higher the asset under management, this is a direct representation of confidence. How much do Kenyans trust this particular fund manager? So uh, the bigger the the bigger the asset under management, I believe it is a sign of stability. It is a sign of confidence. It means that investors trust this particular fund manager, and that is why they have entrusted them with so much of their hard-earned money. They are comfortable giving this fund manager. They are comfortable giving this fund manager their money so that they can invest on their behalf. And now, the award of the most trusted fund manager, I'm not saying that they are the best, but from the statistics, from the statistics, the award of the most trusted fund managers goes to Sunram Unit Trust. So this is where most of Kenyans trust that their money is safe. So majority of Kenyans gave their money to Sanlam Unit Trust. Now, number two, Sanlam Unit Trust commands 19.1% of the market, which is quite a big share. 19% is not a small share. It means that among 100 Kenyans who has invested in among 100 Kenyans who have invested in the collective investment schemes, 19 of them are in Sanram Unit Trust. And number two, we have CIC. CIC has been on the top for quite some time, but it has been overtaken by Sanlam. So at number two, we have CIC, which is taking a 15.7%, and that is a 93 billion, followed by Standard Investment Bank Unit Trust with 77 billion and 12.9%. Let me mention something about Standard Investment Bank by one fund, that is the Mansa X Special Fund. Maybe you might have heard about the Mansa X Special Fund. That is the fund that has placed Standard Investment Bank at position 3. Hint that now that everyone is getting into money market fund, or money market fund has become so common. People are already doing more research, getting more information, and moving into special funds. And that is why some of the two special funds that are most common in Kenya has become so famous. That is Mansa X and the X Special Fund, because people are now comfortable with money market funds, and they want something better. That's why they have already started moving to special funds. So it's Mansa X that has placed Standard Investment Bank at position 3. So that is how good uh, the special funds are doing, and we'll see in a short while. Now, at number 4, we have NCBA that is commanding 9.5% of the market. Then we have Britam that is commanding 6.9% of the market. ABSA doing 4.3%. We have Old Mutual doing 3.9%. We have ICA, we have COP, we have KCB. Those are the top 10. So from the entire list, you can check where your fund manager is doing. And another fund that is the fund manager that is placed at number 14. I hope you can see on the screen. And I'm not advertising any fund manager. No fund manager has paid me to do so. So I'm not advertising any of them. But I'm just giving you information. What you decide to do with that information, it's up to you. It's number 14 out of a possible 55. We have ZD Money Market Fund. So this is a money market fund that is run by Safaricom. It was introduced, that must be late last year or January this year, and they have managed to collect. They have managed to collect 10.2 billion from Kenyans, and they are already commanding in the 6 months that they have in the market. They are already commanding a 1.7% of the market. So that is another fund manager that is coming up quite well. And personally, I can attribute the growth that is experienced by ZD to two factors. Factor number one that might have contributed a massive growth in ZD in such a short while. Number one, I would say it is the brand that ZD is riding on. Safaricom. Safaricom is a household name. Now, everyone, okay, not everyone, but maybe 90% of Kenyans interact with Safaricom on a daily basis. So Safaricom is a trusted brand. So whatever whatever the idea that they come up with, people are likely to buy that idea. So, and that is why many people have bought the idea of the ZD Money Market Fund, and that is why it is doing quite well in the market. That is number one. It is riding on a trusted brand. So, majority of Kenyans uh, trust Safaricom. I believe even if Safaricom was to come up today and they start selling maize flour, majority of Kenyans will go buying that maize flour because they trust the brand. So ZD is riding on Safaricom brand. And number two thing that must have made ZD grow so fast is the convenience. I don't know whether you know how easy it is to open a ZD money market fund. You only need to have the M-Pesa app and just do a click onto ZD Money Market Fund and opt in. Like basically, you don't have to move even an inch. You don't have to go searching for the fund managers on the internet to do it, to know whether you can do it online. It is a money market fund that has been integrated by it is a fund manager. It is a money market fund that has been integrated with something that you do on a daily basis. Most of us use M-Pesa on a daily basis, right from the morning when you wake up, when you are going to your workplace. You might use your M-Pesa to pay your bus fare, and at that point, you have interacted with Safaricom. At that point, you might have already interacted with your M-Pesa app. And it is on the face of that M-Pesa app once you log in that you'll see something written ZD Money Market Fund. So I'm sure you cannot transact with M-Pesa for a whole month without getting curious to know what is this ZD Money Market Fund? What is it doing on this particular app? Uh, can it benefit me in any way? So I attribute the growth of ZD to number one, the brand that is riding on, and the convenience that comes with opening a money market fund with ZD. You only need to have an M-Pesa app, and you are right in there. So you can check on the table and get to see where your fund manager is ranked. Are they on the top 40? So just take on the risk, get to have an idea of how your fund manager, get to see whether there are any decision that we can make. Now, the top five of the CIS market commanding a market share of 64%, with each managing more than 40 billion. So, uh, the Capital Market Authority has again gone a step further to identify uh, the fund managers with that particular brand. So I can rephrase this and say that these are the most trusted brands when it comes to fund managers. Number one, Sanlam. Number two, CIC. Number three, Standard Investment Bank. Number four, NCBA. And number five, Britam. So those are the most dissect. Also, the 14 giants are controlling 90% of the market. Old Mutual, ICA, COP, and ZD. These are the 14 giants that are controlling 90% of the market. So we have around 40 fund managers that are active, and 14 of them are uh, controlling 90% of the market. So it means the remaining 25 are controlling only about 10% of the market, or even less than 10% of the market. So it is you to decide whether you will be with the majority or you will be with the minority. In parliament, we have the majority and the minority. So the same case with the fund managers, the information, and now it's upon you to decide on which side will you sit with the majority, with CIS, to be fair enough, also to list the smallest fund managers in the market. They did not end it at mentioning the top students. They also mentioned uh, the bottom students, maybe so that their parents can be aware. You see, even in school, if you just keep mentioning the top students, the parents to other children might not know how their children are performing. So they decided to also mention the bottom 10, the bottom 12 actually. That is in terms of asset under management, so that the investors who have invested their money there can also know how they are doing. And the bottom 12, let's just mention them. We have mentioned the top 14, so it is only fair that uh, we get to mention also the fund managers that are managing the least assets. We have Gulf Cup, we have Mayfair, we have Orient, we have Genghis, we have CPF, Amana, Nexon, Wanafunzi, Jaza, that is Enjaza Unit Trust. So those are the fund managers that are managing the risk. The report is quite huge. So at this juncture, that analysis at that point. But I will continue with the analysis in the subsequent sessions. So keep tuned anytime we have a session, so that you get to understand how the market is faring. And one of the ways that you can ensure that you don't miss any of our sessions is ensuring that you subscribe to the channel, so that you get notified anytime we have a live session. You get notified anytime we upload a new video. So subscribe to the channel, and you will be sure to be notified anytime we get to post a new video. But at this point, I wish to point, but I promise to continue with the analysis in subsequent videos. So I wish you a nice time, and may I get to see you in subsequent videos. Thank you very much.